Good morning everyone and welcome back to this new video. I will try to show you how we can take advantage of some features of the Pro service. Right now it's 1:47 p.m. in Italy, so there's still about an hour and a half, an hour and 40 minutes until the US markets open. It's June 24, 2025. I'm looking at the 5-minute chart of the NASDAQ with my setup for the 5-minute chart, where I've loaded the daily, weekly, pro. The weekly pro, so I have the weekly levels and I have the profile set with the daily profile, okay? And I've set the dynamic profile, updating it every hour, so that basically I have a fixed reference point. When we find ourselves in these phases of a sideways market, you can see how you can take advantage of it. Let me zoom in on everything for you. How you can take advantage of the dynamic profile. Right now, basically I've said, see how it made this drop. This one in the last hour, it went to touch exactly the one, let's say, the expected hourly low, and then bounced back up almost up to R2. So many daily opportunities, as in this case, for example, you could also consider, some shorts in this area here. Because you see, we're in the part where, as you can see, the reactions have been brief. There have been few touches, which we can tell from the size and thickness of the lines drawn, whereas this is the area of interest. So there's a good chance that the price during volatility spikes could reach these levels and then pull back. Clearly, this isn't a fixed rule, because it can also happen that within the hour, when this profile is supposed to be the reference and therefore hold between the highs and lows during that time, in that hour it could obviously also happen Tate. Obviously, when it gets violated, you can go and update it from the settings, maybe by changing the setup, choosing a different time frame. So instead of 60 minutes, 30 minutes, you'll immediately get a new update, or you can wait for it and treat it exactly as described in the strategy from the book as a violation, so a breakout of the hourly range, and then we move towards new targets that you can use as a reference. Because of course, by zooming out on the chart, we obviously have the other daily profiles, the other daily levels that we can use in combination with the dynamic one. In addition, we also have the signals, the indications that N6 and the contrarian can give us, which can help us in reading the situation. It is also very important to look at the VIX, which is this light blue line you see on the chart, which gives us a bit of a sense of an average, but it doesn't work like an average. However, you can use it as a reference. When the price is above it, it tends to go up, as you can see, or when the price is below it, you can generally assume that the price might start to go down. So it's a kind of reference point, a sort of area of change, of regime shift at that moment, which you can use, I repeat, just as a reference to get an even clearer visual idea of where the price is and which trades might be more worthwhile to try. Obviously, even here, maybe it wasn't a trade worth attempting, but if we already take into account, if we look and see that we have these dynamic levels here, we have a textbook hammer, because it's a reversal pattern. At the open of the hammer, you could, at the candle following the hammer, at the open, so at 268, you could have entered and aimed for the higher targets of the profile, of the dynamic profile, while waiting for the market to open. Basically, those are 22,270, 22,300, 22,295, so about 20-25 points that you could have easily taken home in complete peace of mind, even before the market opened. And so even during the session, basically in the sideways phases, we can take advantage of it. Obviously, during periods of high volatility, it's a bit less, let's say, advisable to use it, because of course the extent of the volatility and the strength of the movements themselves could easily lead to it being broken, but it's still absolutely valid even in those circumstances. Personally, I prefer to use it more when the market is moving sideways. When the market is trending and we have a clear and well-defined market direction, I obviously refer to both the daily and weekly charts in order to look for potential targets and possibly to identify where a market reversal point might be forming or developing. Of course, this isn't something to catch on the fly. It really depends on the overall breadth and the underlying strength of the current trend. Sometimes it takes careful observation and patience, waiting for confirmation before making any decisions. Another element not to be underestimated among all these tools is the volume pressure, which absolutely gives you valuable indications about whether and how much the volumes are accompanying the price in the direction the price is moving. So not only do we look at the price, but let's also make sure that the volumes are accompanying, in short, the direction of our trade, because it is absolutely, let's say, a valid reference that can be useful to us when reading the momentum at the moment we decide to open a position, or perhaps to close out in that case as well. We can assess the strength of the volume pressure, because when we see it constantly decreasing, we can assume that the market might be taking a break and that there could be a bit of a retracement, and maybe that's the moment to take home part of the profit, or perhaps to close the position entirely and then wait for a retracement in order to re-enter in the direction of the trend. Perfect. So I've made this short video basically with a few insights. On a statistical level, we can have some references, obviously with the tables that I haven't shown you yet, but that we can go ahead and show. If we go ahead and show the tables, if we take a look, basically we can get from a statistical point of view a percentage of points, a total of how the levels have acted as support, as resistance, what the average number of points they have offered is. And so certainly, even from a statistical and backtesting perspective, because with these statistical tables, you can definitely get a more complete picture of which levels you might be able to take advantage of and under which market conditions. Perfect. With this, we've reached the end of this video. I'll say goodbye for now, and of course, we'll meet again in the next video.